If you are looking for doom and gloom with the housing market and negative news, I am not your gal this week. I do not have negative news for the housing market. So if that's what you're looking for, you may not want to watch this video. All I have is some positivity. So let's get into it. This week, you guys, the Fed is going to meet, and it's most likely that they will hold rates steady. That's the expectation. The question is, when will they start cutting rates? If they do, will it be March? Will it be May or later than that? The expectation or the anticipation that they would cut rates in March has dropped to 46%. And that previously was about a 71% chance that they would cut rates in March. That was as of a month ago. So now the odds of a cut in May are roughly 51%. We're really just going to have to see what Jerome Powell says this week. A lot of it, of course, is data dependent, as he says. So depending on what's going on in the economy, what inflation looks like, and a variety of other factors, they'll be making their decision. But Fed's been kind of split on what they want to do next. And for now, it seems like things will stay steady. Now, remember, that is not the mortgage interest rate, but interest rates are going to be affected by what the Fed does and what they say. So speaking of inflation, the Fed's favorite inflation gauge, the PCE, came out last week. It rose 0.2% in December, up 2.9% from a year ago. This was good news because the expectation for this reading was to come in around 0.2% and 3%. So nothing big and bold, no big changes, no curveballs. That's always good news. So, what's going on with mortgage rates? Well, according to my sources last week, everything stayed pretty stable, went up slightly, but it doesn't seem like there was any big change. So if you're a buyer out there, definitely touch base with your lender to make sure that you are on the same page of what's going on and what you can take advantage of. But last week was kind of a boring week, which, hey, we'll take it after a lot of volatility for a few years. Boring week is not bad. So Mortgage News Daily published this article about contract activity, suggesting an uptick in spring home sales. Like I said, all I have is positive news for you guys from the standpoint of more contract activity, more listings, and unfortunately, that means stable prices, not prices going down, unfortunately or fortunately, depending if you're a buyer or seller. I'm trying to stay neutral here, but sometimes I get comments of being either biased one way or the other, or being confused on what I'm trying to say when I say positive or negative. It really depends if you're a buyer or if you're a seller, what side you're kind of rooting for, essentially. But as far as pending home sales have been down last year. It was a terrible year for home sales, the lowest since 1995 in terms of transaction volume in the resale market. And so there is this pending home sales index that they are watching, the National Association of Realtors. It rose 8.3% compared to November and December. It was 1.3% higher than a year earlier. So this is based on the number of contracts to purchase single-family homes and a variety of other properties. And they are going to publish in February the numbers for January, but so far this is showing a pretty positive trend. And they said it's an indication of the future transaction volume. And so they're feeling very confident on what they're seeing so far. Housing market's off to a good start as consumers benefit from falling mortgage rates and stable prices. Job additions, income growth will further help with housing affordability, but increased supply will be essential to satisfying all potential demand. They talk about different regions of the country, but basically the outlook for 2024, the economic outlook, according to National Association of Realtors, projects a 13% increase in existing home sales to 4.62 million this year and a 15.8% increase to 5.35 million in 2025. So we'll see if that actually happens. Everything that I've been seeing so far has been, like I said, very positive, very much looking closer to some sort of recovery, if you will. The Cromford report talks about that this week too, so I'm going to get into that. But that's where we are as far as that goes. Again, more news on that front. Demand for purchase mortgages climbs for a third week in a row. So as these rates have come down, they're not making a ton of changes lately, but they are bringing out more buyers trying to get a application for a mortgage. So that is our future demand as we're seeing that happen. Now, I thought this was pretty interesting. This is the tale of two housing markets. And if you're not familiar with Zonda, they focus mainly on the new home market and home builders, but they have a lot of great data about the housing market. And I listen to Ali Wolf often. She is an excellent economist. She's their chief economist there, and always has some really great insights. But in this article, she's talking about how there are basically two different housing markets going on. There's the new construction market and there's the resale market. As I said, the resale homes hit their lowest level of transaction volume since 1995. And meanwhile, we had new home sales growing by 11%. So there's really this divergence between the two types of markets. And she expects that to continue this year as well. She talks about how new construction has such an advantage because they are able to buy down interest rates. And so if you're seeing market interest rates in the high 6s or low 7s, builders today are offering rates in the high 4s to high 5s. So that really makes sense why there are buyers going in different directions. As she says, new homes won't appeal to all buyers, but they currently represent about 30% of the market compared to only 10 to 15% of the market historically. They have this map here of some of the major metros and how their new construction markets are performing. And Phoenix is yellow, meaning it's average. They have some markets performing slightly overperforming or significantly overperforming, and some underperforming as well. Phoenix is right in that middle ground to be kind of average compared to what it's done historically. All of that being related to new construction, of course. Speaking of Phoenix and new development, have you seen this? The land surrounding TSMC in that North Phoenix area is, there's going to be some more land opening up, and the bidding is expected to start at $56 million. It's pretty interesting because they're going to be developing more than 2,300 acres surrounding the TSMC campus. And this is going to be for commercial real estate. So additionally, some other businesses going there, some retail spaces, really trying to build out this massive technology science park reminiscent of Silicon Valley. It's this area here, and I'm sure you guys have heard of TSMC being built, and a lot of talk about what's going on with home values. And actually was just speaking with someone lately about the land surrounding there and why that hasn't been auctioned off yet or gone up for development. And now here we see this is starting to happen. He said at full build out, this could create 50,000 jobs at a minimum. So that's something to keep in mind if you're thinking of moving to Phoenix, what area you want to be in, or if you own property around this area. I do think this is only going to help home values in that area because it's going to have to house a lot of people to be able to employ them. So that's great economic news for our state. By the way, if any of this information is helpful or interesting to you, make sure to hit the like button and share it with someone who would find it helpful. Let's move on to what else is going on in Phoenix. We've got the Cromford Market Index. If you're new, this number here needs to be above 110 to be considered a seller's market and below 90 to be considered a buyer's market. And we are at 117.1. This has been continuing to climb, as well as our demand. Demand is at 73.8, which that basically means that we're 28% below normal, but we've got supply that is 37% below normal. So while supply is also going up, demand is going up faster as of right now. And so that is pushing us further into this seller's market environment. We've got another week where we see all of these cities with a green arrow going upward, which means their CMI went up, which means they went further to a seller's market. Now, keep in mind, not all of these cities are in a seller's market. Anything from Surprise down to Maricopa is not technically in a seller's market. Peoria up to Chandler on this list is. So depending on where you're at and what you're trying to do, whether you're buying or selling, hopefully this helps you. Overall, we saw an average change of these cities month over month to be only 12.4% compared to last week, which was 12.6%. So even though we're seeing all these cities move in the direction favorable for sellers, on average, it was just slightly less momentum than we saw last week when we looked month over month. Not a big change, honestly, just kind of negligible, but just want to point that out. The Cromford report is also saying, like I mentioned, supply is going up. We've actually seen far more new listings arriving to the market now than we did this time last year. And so that's what's stopping the market from heating up too fast, even though we're seeing this demand recover. We've seen 7,467 new listings, which is up 22% from 2023 and even up 13% from 2022, 10% from 2021. So compared to all those last few years, we're seeing more new listings hit the market this January. In addition to that, where we're seeing this demand come in, we're seeing listings under contract up 41% compared to the beginning of 2024, even though it's only been 3.5 weeks, almost 4 weeks. We are seeing a big increase in the number of listings going under contract, which is to be expected this time of year. Now, what the Cromford report is saying specifically is with demand and supply both increasing, we should see a recovery in transaction volumes and firm pricing without the risk of runaway appreciation. They do say, however, sentiment is uncertain and volatile. So long story short, what we see today, it does look like things are moving in a positive direction to a more stable market without values falling, but without values skyrocketing. So that is really good news for buyers. And that being said, there are things that could come into the mix, curveballs that could totally change this anticipation. So it is not set in stone, but from what we can see right now, things are moving in a positive direction. If you have questions about what's going on in the real estate market and if you should buy or sell depending on your situation, check the description below to set up a discovery call where we can discuss further. And don't be fooled by those real estate myths. Make sure to check out this video right here.